All right, everyone. Happy Sunday. Doing things a little different on this Sunday. Wanted to go live. We have a lot in store for you today. We're going to look at about 10 to 15 charts, including, I know, your favorite WTI crude oil, and we'll leave that for towards the end of the stream. Now, if you're coming back and you're already watching this on the replay, I will have a timestamp in the video description area. So down on your video, you can just jump to the different pairs that we're doing. But on the live stream, we're going to give you massive value. Head over to the comments. Let me know where you are watching from. Let me give you a quick shout out. VJ, good morning to you. Welcome to today's live stream. Stern 41. What is good? Welcome to the live stream. What is good? So Venus, what is good? Welcome to the live stream. RC, what's up? Welcome to the live stream. And we are not going to waste any time. We are definitely just going to jump right into this right in here so that we can get started. Good to see where everyone is from. So listen, before we get started, I only have one request, and it's not going to cost you any money whatsoever. This is all I need you to do. I need you to go to your video area and do this. Hit the like button for me on this video. That's it. You're getting over 15 charts today. So all I need you to do is hit the like button. It does nothing else. It costs you nothing to do it. And I greatly appreciate it. So we are going to get started and jump right into the analysis here. And again, let's welcome everyone to December 2024. This is it. Final month. We're going to trade smart. We're not going to trade harder. We obviously are going to stop trading towards the end of the new year as we get into the holidays. But whether you're in my trading club or not, I'm going to give you massive value today. And if at any point you have any comments about any of the charts that we cover, I want you to head down to the comments area, leave me a comment so I could give you some feedback. So without further ado, let's jump right into the analysis. And we're just going to kind of go in order, right, based on my list right in here. I'm going to focus in on the daily time frame. I want to give you some opportunities to maybe look at some swing trade opportunities. And we're not going to break every pair down. I'm just going to kind of give you my sentiment, my area where I definitely look at. So whether you're on the future side or on the Forex side, if you stick around, you're going to get massive value. And let me get a quick sip of water here. Okay, so we are starting with the Australian pairs. If you can see right here, we've got a lot of consolidation happening right in here. Okay, so if you look over here to the left, okay, you can see here that after we had a lot of days of consolidation, we eventually had a breakout. So I would tell you, you should be looking at that exact same thing here. Okay, a breakout to one direction or another. Now, I do see some unmet liquidity up here. Okay, so the way I would kind of start taking a look at this on a higher time frame is if you can get, which we already kind of did have, a trend line break here. Okay, again, this area here seems to be a very consolidated area on the daily time frame. Okay, we do see that over the course of the last 4 days last week, there was a lot of selling pressure. So they have not been able to close above 91.37. Okay, so I'm just going to drop down real quick to a 4-hour time frame just to be able to show you kind of what's happening here on this trend line for now. Okay, there is going to be a lot of news happening. Make sure that you are checking the bottom of your trading view chart. So for AUD-CAD right now, again, probably looking to pick this up somewhere around here, possibly back for another long position, back up to the high with a stop below this low here. Okay, it's only a 2-for-1 right now, but we are sitting on a daily time frame. So again, AUD-CAD, again, checking the levels of the currencies, lots of news coming out. But again, this could probably be a area here, kind of down here at the support level, where based on price action, you might want to look to pick up another buy right around there. And again, the script completely flips, okay, if we get a closure below this 90.41 area. So that's a little bit of a long-term play that you can look at as you start winding into your trade analysis right in here. Okay, welcome. Hey, RC, I appreciate it. I appreciate it. You following for over a year. I do see your comment. So awesome. And we'll get to some of the bread and butter ones here in just a minute. So again, hopefully you are marking up your charts as I am as well. So you can actually get this same value as well. Okay. So let's go ahead now and jump over into our next odd pair. And so a lot of these you're going to see that are kind of following the exact same script. So if you're trading one, you might as well be trading all the others. I'm going to give you some levels here. Okay, I'm going to get more detailed once we get into crude oil, natural gas, and the indices. Okay, so we're looking at this level right in here. To the top side, okay, I would definitely buy a break and close above this level. Okay, on a smaller scale, you're looking for price to break, retest, and then head higher if the Aussie dollar becomes stronger. For now, this is your floor. Okay, for now, this is your floor. So looking here on the 4-hour time frame, we can see here that before price closed, they were coming down to make a liquidity grab. So on all these Aussie pairs, okay, if the Aussie dollar begins to get stronger, this is where you're going to stay. So this becomes the playing field. Okay, until otherwise, that's the playing field. So you keep it very simple, right? You don't really need to think too much about it. You should be buying at the low points, okay? And again, based on the price action, we saw a nice M pattern form right here. You really have to wait for a clear breakout, but if you're going to try and scalp this, you want to scalp it from the bottom for the buys and from the tops for sells until price action goes above 57.48 or 57.10. Okay, so that's kind of the view for this pair right now. Again, all these Aussie pairs, when you bring it in a little bit closer, are in this consolidative state here, both on the 4-hour and on the 8-hour. So again, don't have much to play with. When these things get a little bit difficult, I want to be able to give you some structure here for the end of the year. And again, towards the end of the year, you're going to find that in a lot of these pairs, what's going to happen is they're going to start having sell-offs. They're going to start lowering prices in some cases to get better value. But again, you want to make sure that you are not trading too high of a lot size as you get into December. And then secondly is you try to stay with the trend as much as possible and just maybe look to scalp. I don't think you really want to get into any long swing positions as the calendar year is wrapping up, with everything starting kind of fresh in January of 2025. Okay, so let's head down here and let's take a look at the odd JPY. Now, this one has been in a super nice sell-off here for a while. We've been trading this one in the trading club for quite a while now. We actually started selling up here at these levels on the JPY as the JPY was showing much, much stronger strength than the Aussie pair. This looks like it's going to continue. Okay, so we're going to throw a Fibonacci retracement on odd JPY, and we can see that we are on an 8-hour time frame, right, approaching kind of this 61.8 area. So as we move over into the daily, again, look at where this daily candle closed. We do see a bearish engulfing candle right here on this particular pair. Okay, so this looks like it has all the making of continuing to go shorter, as structure has definitely closed below that structure level. And I would probably target this next level right here for odd JPY to continue selling this particular pair down. And again, it doesn't mean that we're not going to get possible retest back up to this area. But again, I think if you look at the daily time frame, if you can get some form of retracement, if it gives it to you, I would definitely look to sell odd JPY again, just based on that structure that we see right here. Okay, if you can see the structure on odd JPY, drop the number 6 in the chat. If you can see the structure on odd JPY, drop the number 6 in the chat. I want to make sure that we use and we maximize our time together so that you can also maybe either learn something or validate something to yourself. But again, this daily candle is a bearish engulfing candle. Seems like odd JPY is going to continue to the downside. Hey, what is good, Brad? By the way, if you get a chance, check out Brad's channel on Elliott Wave Made Simple. He's dropping some awesome nuggets. We appreciate him in the group as well. And he's dropping his entire information on Elliott Wave charts, 10, 15 charts a week. So that's just a whole bunch of more value that you are getting inside of the trading club. Okay, so that's our JPY. And again, those of you in the trading club, you don't need to worry. You're going to get all these charts by the end of the day. Okay, let's take a look at AUD NZD as we begin to kind of wrap up the Aussie pairs. This one here is coming to a structure point right in here. We're going to need to see and wait to see what happens at this structure point. Okay, if we take a trend line and we kind of just kind of give you a visual of kind of what happened here, okay, we can definitely see that we did have a trend line break, but now we are coming into a heavy support zone at the bottom. So this one is going to be interesting to watch. Again, I would not try and buy this candle right now. I would wait to see what the AUD NZD does over the course of Monday and kind of wait to Tuesday. And then if you can get some type of price action, okay, a bullish engulfing candle that looks like this green one over here on the 4-hour, that will be your cue to take AUD NZD long. Until then, you have to stay short on this particular pair. We may get another retest of this level here. So again, that just only validates if we come a little bit lower. Okay, we're on a high time frame, so we're not talking about 5 or 10 pips. We're talking about another 20 pips down or so if they're going to retest this level. Now, on a bigger scale, if you take a look at this chart, what do you see? Okay, if they close below this level, this could be the start. If they close on a 4-hour or lower time frame, then obviously we're going to start visiting these lower levels down in here. Okay, so it's all going to be dependent on price action. And again, price action is king, and price action on a higher time frame is where the banker's money is being traded, not on a 5 or 10 minute chart. So again, you always want to peek at what's going on with these higher time frame candles. So it's either we're going to wait for a bullish engulfing candle on a 4-hour or higher here to go long, or we're waiting for structure break to then sell back down to our next level on AUD NZD. Okay. All right. Let's continue. Let's do one more with the AUD USD. Again, now for this one, we always want to peek at the DXY. We'll cover the DXY in just a little bit, but we are seeing here, okay, we had a couple of false breakouts. So let's just go right to this structure zone right in here. Okay. I always say you have to count the wicks because the wicks tell the story. Okay. So if we kind of move our chart over here to the left, we can see, I'm beginning to lose my voice, that we've had a rejection here at 63.58 back in March. And then we had another rejection here, okay, in August. So what is going to happen here? Are we going to come down and hit it a third time, or are we now going to possibly begin to climb with the Aussie dollar and the USD, which would mean if we're going to climb, that means that the US dollar is getting weaker. And again, we will pinpoint that as we get to the DXY. So for intraday trading, in my opinion, again, there needs to be a breakout of this level here at the 4-hour level for you to go to one direction or another. But based on, we see structure points here, right? You're probably better off trying to pick up another long somewhere down in here. Okay, if price comes down here, you definitely want to go and try to go for another long down in this position to possibly swing back up to these highs that are here on this 4-hour chart. So for now, as an intraday trader, you definitely need to wait for a close above here. If you get a close above here, then we are taking AUD USD to our next level, which is up here. If price closes below this level, then that's a clear sign that we're going to come back and retest this lower level down in here. Okay. So again, we'll update you in the club. We give you charts in the club. We give you buy and sell trade alerts in the club. So for now, we're waiting to see what price action is going to do. We don't trade on Sundays. We only trade live the gaps at 6 o'clock. And again, so that was going to be the two scenarios that we are kind of looking at as we go through. Okay. So yes, we know the NFL is kicking off right now. My Dolphins lost on Thanksgiving night. My Hurricanes lost yesterday. So it is a sad weekend for Miami football this weekend. All right, let's go ahead and move down. Now, I'm not going to hit every pair, but I've got a couple here that I've earmarked that I definitely want to talk about. And one of those is going to be Euro JPY, because the JPYs love to move in unison. Okay, so if you're trading one in one direction, you might as well trade the other. So we definitely had a structure point there. And then here, we are right at another structure point for Euro JPY on the daily. Okay, and then down at the bottom, we have this retest area. So you can see right here, well, we've had a couple of wicks come down here. So again, as you know, a line is never an actual zone. It is an area of interest. So what is going to happen, and how will EJ respond to this area? Because we can see over here to the left that previously when it was in this area, okay, even on this big bearish engulfing candle, we came down, we rejected, came up, retested, and then continued up. So this is going to be a key point to what happens here with EJ on a long-term basis, okay? But if we drop to a 4-hour, we can clearly see that we even had exhaustion, okay? We had a lot of exhaustion at the end of last week, even though it was a shortened trading week. So it looks like we're still, we're still making the lower lows, lower highs, lower lows, lower highs, and then a lower low. So it looks like EJ is going to target a lower level. We had a very small close near that level. So again, what will happen with EJ? Will EJ gap tonight on Sunday? I can see EJ possibly, doing another layer down right in here. And I'm going to mark it as a blue line for my reference for my group right in here. Okay, so if we see another 1-hour candle close below this level, we are going to take EJ down one more time. Okay, if we get a 1-hour candle to close below 158.21, we're coming back down about 100 points to about 157.20. So we're going to be keeping an eye on this area early in the trading week on EJ. Are they going to flush us up one more time? No question. You should still be bearish on EJ for now, especially right here in the zone. This is going to be a key zone for EJ, whether we're going to start to climb back up, or are we going to head down into the 157s and 156s on EJ. Okay, if you got any questions, drop them in the comments and I will get to you as well. Okay, let's go ahead and drop over to, well, we're not going to take a look at GJ. We are going to take a look now at natural gas. Again, we're going to be leaving crude oil here for our very last chart. Now, natural gas is a trade that we gave you in the club last week. Congratulations to everyone who took the initial profits when this gap here that we originally had was closed. And as the gaps close, okay, I remove the gap signage from the chart so that you are not jaded. So right now it looks like natural gas is possibly giving us, right, that possible M pattern. And the question is, are they going to come back down to close those gaps? So as you can see right up here, club members, I've got an alert set at 3.38. If that alert breaks, we are going to be looking at continuing to sell natural gas up in here if the price action dictates. Okay, we are beginning to see a lot of snow and cold weather, so the demand for natural gas could rise. Again, these gaps mean nothing in the sense of there are still open gaps. Okay, so if you've never traded natural gas, this is probably not the time to start trading natural gas. Okay, natural gas can be very tricky. There are still gaps open from January 23. Yes, January 2023 that are still open. So the way I approach natural gas is whether I'm trading it on the Forex side or on the future side, smaller lot sizing, because this thing can run like a beast. And you definitely want to have your risk in place. And if it breaks a level and you got to close your trade and look to re-enter, because natural gas can run for quite a while. Okay. So kind of getting back into the chart here, we're going to wait to see what the price action is here. Again, once we get a sign like this one, right? This was the telltale candle, this red, okay, bearish engulfing candle that closed below this level. Okay, if we get that again up here, down here, we're going to run it down one more time. Okay, until we do that, we're just going to kind of wait and see what happens with natural gas. Because as you all know, we trade every Sunday, the live gap analysis, we know that it is not unforeseen that natural gas today can open way up here. I mean, they create some massive gaps in the market each and every Sunday. And as you can see by these lower gaps down in here, okay, this was a gap from Sunday, November 17th, and this was a gap from Sunday, November 10th that has still not closed. Okay, the only gap that closed was the gap that was created here, okay, last weekend. So this thing moves. It could make you some nice profits, but it could also put you in the red very quickly. So if you've never traded this is not the time. And again, I would use a lot of caution trading natural gas for the rest of the calendar year. So we're not going to do too much for this here, club members. We'll give you this exact same chart. I'll give you the alert when it comes out, and then I'll tell you when I'm either buying or selling natural gas on there. Okay. VJ, I just saw your question, so I don't have time now to go back to it, but just ask me that question on that particular chart in the club. Send me a message, and I'll see if I can pinpoint exactly what you were asking on that question there. Okay. Let's take a look at, I do want to take a look at the indices as well. And gold is still coming up. So we are going to definitely be looking at that as well. And I did want to look at Euro USD. Okay, this will be the last Forex pair that we look at. And this is only because there is still an existing gap that is a little bit open right here that did not fully close last week. And open gaps on Forex screams opportunity. Okay, so this is the level. Again, we're going to target this level here. Okay, many of us closed the original gap. And again, you should never take a gap right to the actual gap. It was only about a 10 pip difference. Again, depending on your spread, depending on the exchanges at the time in the market. If you wait until the actual gap closure, there's a good chance that your gap will not close. So myself and many others, I like to cash out somewhere between 15 to 20 pips above the actual gap, because a lot of times this is exactly what they do. They come down pretty close. You don't put a stop on your trade, or you don't cash out your trade, and then they move price in the opposite direction. But the good news is that if you have not yet traded Euro USD, we are going to be looking for price action to trade this. And I'm going to give you that setup right here, right now on the live stream. Okay. So if you want this setup, all right, drop the word setup in the comment box while I grab a quick sip of water. I'm going to give you what to look for Euro USD. All right, Stern, 41, first one in the house to drop in the word setup. So let's do it. I'm waiting for a break of this 3 candle rule, something we just covered in our club, in our weekly training sessions and in the mastermind. So we are going to give you a setup here on Euro USD to short Euro USD right in this sell stop area. We're going to put this stop loss right above the wick, plus either an ATR or your spread. That should always be the game. Okay. And the goal is hopefully you can take it all the way back. Okay. As you know, every trade that we do is 2 entries. We secure 20, we protect the second one, and then we hope for the runner on the second one. Okay. So we are going to look for a break of structure here. This is going to be a sell stop. Okay. So on the way down, we are looking to take advantage of price basically doing one of two things, either just shooting down, right, or at least coming down, getting your first activation, and then possible retest into this area, and then possibly coming back down to eventually close that gap. And again, we will cover the DXY here in just a minute because, again, this is a US pair, so it is very driven by the dollar index. Okay, so this is what we're looking for now. If you're not in the trading club and you want to take a screenshot of this, I'll leave it up for another 5 seconds so you can take a quick screenshot. Club members, don't worry, you'll get these charts in a couple of hours. Okay, so that's what we're looking for. We're looking for that sell stop area right around 1.0563, 1.0563 to run it down 20 pips and or complete the gap. And there's also a liquidity zone sitting right here, which will be a nice secondary target as well to look for that is prior to the gap. Okay, so that is Euro USD. Let me check the comments real quick. All right, awesome. Business Sound, good to see you on here. All right, awesome. Hey, don't forget, if you're getting some value, drop that like button. Hit that like button if you're brand new. First time here, welcome. Hit the subscribe button, turn on your notifications. We got some really cool stuff coming up in 2025. We're going to do a lot more into investments, ETFs, stocks. We now have a group in our trading club that does options. Okay, we've got stock room in there. We've got the Elliott Wave room in there. You're not going to want to miss it for $1 a day. You can lock in your 2024 pricing now, because in 2025, they're going to go up a few bucks. Whatever you lock in now, that is your guaranteed price for life. Your dollar can only go down, meaning I will only discount your pricing. With time, I will never raise it up once you lock in a current price. Many of our members right now saw a nice 30% cut on some of their pricing for just being in the club. Okay, so let's go ahead now and drop over into our first index here. I definitely want to go into the NASDAQ, one of our favorite pairs to trade. Who doesn't love the volatility of the NASDAQ? Okay, so we did see a nice bounce off this support level here last week. Congratulations to those members who were taking the buys off the support level. So this is our current playing field. Okay, if we kind of squeeze the chart, which again, I always encourage everyone to squeeze the chart, you can see that over here, we just have a black hole, right? There is no data because, again, the all-time highs with the NASDAQ. Okay, so obviously this pair is remaining bullish here. Again, we have to think about December 2024, last month of the trading year. We've got inauguration coming up for a new president coming up. So again, where will they move the markets? Are they going to continue making highs to finish the year? Is there going to be a dump in the markets first to bring price down? So there's a lot of what ifs, but we trade what we see. We do not trade what we think is going to happen. So based on that, we are sitting on a daily time frame. We are going to draw a Fibonacci level, and we normally begin to look for possible types of reversals near liquidity areas or near that 78.6 area. We can see right here where they didn't make a liquidity grab on this candle, and now they are coming right back up into the area. Okay, so don't know what's going to happen with the Sunday gap, but as we get into Monday and Tuesday, if we do not see price close above that 88.6 area, right, we're going to start looking for short positions kind of like right in here to try to bring this back down to possibly give us, again, that M pattern on a higher time frame. Okay, that's number one. Number two is we do still see unmet liquidity on that candle, right? Will they come back for that liquidity candle before 2024 ends? I know that's 1,000 points away, but it's very possible. But again, we will trade what we see and not what we think. So as of now, right, obviously this is just a possibility of a setup. That's why I have the alert here. So again, you all know the drill. Once I get the alert, I give you the alert once I see the price action, and we are looking to see if the NASDAQ is going to come back up and retest any area here first, or are they going to start dumping from here? So we need to see price action, okay, come in our favor, meaning we need to see that 2 or 3 bearish candles give us confirmation that we are going to drop from these levels here. Okay, so this setup right now is just a possibility based on what price action does on Sunday and Monday as the markets begin to open. Okay, so we'll be sitting on this. There's the alert. It's ready to go. You can see my alert at the bottom zone as well. If we break that bottom area, okay, then we're heading down to that identified liquidity zone that we talked about. For now, we're not getting into anything obviously on Sunday unless there's a massive gap. But again, we are still bullish on there. We're looking to see if we're going to catch some form of reversal up in this area, but that is still to be determined. So for now, we are still bullish on the NASDAQ until we get up into this area right in here. Okay. So we will still talk about that as we go through. Okay. So here we go. Let's drop over now into our next one. We did natural gas already. Let's get into the S&P 500. Again, this is the one that, again, out of the three, even though this one continues to make new highs, to me, this is my favorite to trade on futures because, again, you only need, 2-point difference. You can easily have $100 day with a full contract, right? And this one, even though it moves, it doesn't move as much as the US 30 or the NASDAQ. So we're back up to new highs. Okay. You should never buy the new highs. Okay. So we are back at the new highs. We are going to need confirmation. Okay. As we kind of look at these from an 8-hour perspective and a 1-hour perspective, you can see we have no confirmation. Okay. We have nowhere near confirmation unless we just blindly sell the high. We need to see a break of structure to grab those points. Now, what I do see here on the 1 hour is a couple of things: liquidity here and liquidity here. So if this wasn't a typical Sunday with a gap, right? The setup here would be just like this. We would look to short this for a scalp of, 2 to 5 points above that high, trying to take it right back down to the low of last week. Okay. So this, if it sets up, we'll kind of be looking at a sell stop at that structure break to try to scalp, if you're on futures, 2 to 5 points down. Okay. Which, this is a good 30 points down or so. So that's kind of the setup on the sell stop right now, if it wasn't a typical Sunday. Okay. And the reason why I say that is because, remember, when the markets open today, Sunday, there are probably going to be some gaps. Okay. Sunday is not a trading day. We trade live on Sundays because we look for gaps through Forex pairs, gold, silver, indices that are at least 30 or 40 points in size for us to take our gap trading strategy. If not, we don't trade the gaps. For the rest of you, if you're not trading gaps, you should really wait until market closes on Monday. You can really begin to see direction, support, and resistance versus just Monday morning when they fill the equities at 9:30 in the morning. So again, you want to definitely use a lot of caution as you are starting the beginning of the trading week. But I'm going to leave that chart here for now, and we'll see what happens with any Sunday gaps. But that's where I would target a sell stop for 2 to 5 points down on futures, targeting these liquidity areas on the S&P 500. Okay, let's take a look at the Russell, another one of our favorite pairs. Let's head over to the daily. Okay, so let's go ahead and put the structure. Again, clearly see here, right? We can all see that we are still making higher highs, higher low, higher high, higher low, higher high, higher low. We have not yet made a new lower low, which would have to be below this area. Okay, so let's squeeze our charts. We're on the daily time frame. Let's take a look over the left, and there you go. What do you see? This is why it's so important. This is why I cover this so much in our group. You got to squeeze the charts. You got to look at the data. The market loves to repeat itself. So they've come for a full teacup. Okay, they've come for a full teacup on the Russell. Okay, on the daily time frame, they've come for a full teacup. So now that we know we're at that level, it's pretty clear to me when you draw this line that they're probably going to create a brand new high for the week. Okay, so we are going to monitor the Russell as we look at this time frame, because when we zoom in here, okay, we can see that we are kind of in this consolidative state now between these two zones, between there and there. Okay, so we're really between 24.71 and 24.13. So we really are going to need to have price action like this right here. See this price action? See this daily candle closed below this level, came back and retested the next day, and then continued dropping. If the Russell is going to fall down back to this level, we need to see this price action. In the meantime, I do not buy the highs. Okay. If price shoots up, we're going to wait for a similar price action like this, but that will happen somewhere up here versus down here. Okay. So we need to see this, and then this will drive price back down. There is liquidity still in this candle that's unmet. They came and grabbed 100% liquidity of this candle, but they left this one untouched. So if they come down to this area, I can rest assured they're going to come back down for this liquidity. They're just not going to stop here. So once we get the alert, and I like to put my alert a little bit before, okay, if we come down, then I will let you know when we are selling the Russell 2000, and we're going to sell it down as far down as we can take it. Okay, but for now, to me on the Russell, there is no play because I don't like buying the all-time highs. Okay, so that is the Russell. That is the Russell. Okay, to see what happens with the handle on that particular stuff there. Okay. All right. So that is the Russell. Let's get into, so just if you're waiting and you're sticking around, we've got US 30 next. We're then going to look at gold, silver, and then we will wrap up with WTI. Okay, this trade here, this is an active trade for many of our club members. This was the entry, okay, from on Friday. So if you're still in this sell, you should hopefully either you cashed out or you're still in the sell. Okay, so this is still an active sell from this top here, right in here. That happened at about 45,100 or so. Okay, this gap here this gap right here, see gap? This gap did not fully close. So there is still an open gap here. So always check your broker. Okay, so if you're not yet in this trade, then you're looking to take this trade from this structure point here, right? And again, a sell stop maybe all the way back down to the gap. Again, this is a 8-hour time frame. Okay, so if structure can close below this structure point, okay, then you can go short one more time on the US 30. If you already got into the short, okay, like I have from this top here, you're just going to play that. Okay, depending on what happens with the gap today, you should be fully protected, just like I am on that one position. Okay, I am going to tell you that I am a little biased because I do not think that they will leave this gap open for the new year. Okay, I believe they're going to close this gap before the end of 2024. So you're talking about only a few weeks left of trading, and you are talking even from right here, you are talking about 500 points. Okay, so you don't have to catch 500, even if you catch another 100 or 250. Okay, but there is an open gap, so I'm a little jaded that price will come back down into that particular area right in there. Okay, so that is the US 30. Let's go over to gold. Let's take a look at what gold is doing right in here. Now in gold, many of you are already in buys from the buy call area right in here. So if you're still in a buy, either you cashed out or you are still actively in this buy area. Okay, so I'm going to just remove this for a minute, and I'm going to drop this level right in here again. Okay, because we did make a higher high, a lower low, or a low, a lower low, a lower high. Is this the lower low, right? So I'm sorry, lower high. So we are climbing this little ladder right in here. Okay, so we need to see what's going to happen as this ladder is climbing, right? Are we eventually going to come back up to this 2,800 level, right? We shall see. Okay, there is a little bit of an unmet liquidity candle right here, but we'll deal with that if we cross below right in here. This is an 8-hour time frame. This is a 4-hour time frame. So if this trend line breaks, we are going to sell gold. Okay, we are going to sell gold back down to 2620. Okay, if this level breaks, okay, we are going to, just like this, we're going to sell it level to level. Okay, so we need to see a closure below 26.35, and then we take it down to about 26.20. Okay, if you're going to play the bounce up in this area, you need to have a very tight leash. Okay, if you're going to take the buy, and again, we'll see what happens with gaps today. If you're going to try to take this level back up to this high, okay, you need to have a very tight leash, like literally like right here. Okay, because this can fall down very quickly. Okay, so this is the area to maybe take the next buy, or we change our bias, and if we close below, we can always take a sell. Okay, so this will be pending because you know what's going to happen. Gold is probably going to give us a pretty big gap either to the top side or to the bottom side today. So we shall wait to see, and by Monday we'll have a pretty good understanding depending on what's happening with the with any of the gaps. All right, what is going on? What is going on? Our good friends from the Dominican. What is up? What is up, Greta? Alexis, I see you. I see you. What is good? What is good? Okay, so since we're talking about gold, let's head over to, because I did promise you I was going to cover the DXY real quick. Let's take a look at the dollar. The dollar has been in a little bit of a decline here over the last few days. Okay. So let's give you a level. Let's give you a level right here. Okay. This is going to be a very interesting level for the dollar. You can clearly see it's a support and resistance level. It's a supply and demand level. Okay. So by all accounts on price action, they did break and close below that level. Okay. So just based on technicals, if we just base it on technicals, there's a good chance that the dollar continues to get a little bit weaker coming down. I do see some unmet liquidity in this candle. I'm going to set an alert right in here. Okay. So if you see price action, okay, you can see here the last 3 8-hour candles, lots of consolidation. Okay. We are below the zone. If price action continues bearish, then obviously on pairs like GU and EU, you should be buying those pairs because the USD is sitting on the right-hand side. Okay, so that means the USD is getting weaker, which strengthens the pair on the left-hand side. Okay, just based on what I can see the visuals, maybe we start the week with the dollar coming down a little bit more into these liquidity zones, and then maybe we bounce from here and then eventually head back up. So we kind of wait and see on this 8-hour. I'm going to go ahead and put another line here. I'm actually going to move my alert up to this line here. Okay, if we break 105.66, we are heading back down towards 105. Okay, if we break and close below 105.66, we should be heading down. Okay, once we get a 4-hour candle to close up in this area, okay, then we're back off to possibly, head back up. Okay, so this is going to be a very telltale area. When you look over to the left, you can see here, right, previous resistance, previous support. So this is going to be a very important area for what the DXY is going to do. I think by Tuesday, we should get a little bit more clarity, unless we just stay consolidating here for just a little bit. Okay, so definitely we have to take a look at it. There's no clear direction right now. We are consolidating over the last 3 8-hour candles, which means over the last kind of day. There's our 4-hour view. Okay, if you look at the 4-hour view, it still looks obviously, right, like we are declining with the DXY. Okay, I think this target is very viable for early this week. Okay, coming down a little bit more on the DXY. Okay, let's head silver, and then we will go right into crude oil. Okay, so we've had a nice buy zone from this level. I know we've got some members who are still long on silver. Congratulations to you from this 88.6 area. Okay, this, again, we just came back down here, and whether you like to call it a double bottom or a retest of the zone, again, whatever you want to call it, doesn't really matter. The matter is that price went up in the zone that we were looking for price to react. And so I'm going to wipe this out real quick just to make it clear for those of you that are not in the club and seeing these charts. Let's take a look at the daily. Okay, as you can see there, I have an alert. I think if we close above this 31, we're heading up back to 32, 33, and 34. So this is going to be an interesting level right here, an interesting day level right here, right? What's going to kind of happen in this level? If you look at the 8 hour, right? There's our 8 hour. So for now, you keep playing these zones. We talk about this all the time until they change the playing field, right? You want to buy low and you want to sell when it's high. So until we don't get a 8 or a 4 hour candle to close above or below this playing field, to use the analogy on football Sunday, right? We stay in this level. We stay in this level. For some, this becomes easier to trade because the risk becomes lower. Because if you're going to buy from here, you know that your exit is just below the low. If you sell from here, you know your exit is just above the high. So for now, we have to wait to see what happens with gaps. These are the two levels that we will monitor. Okay, early in the week, I'm going to put an alert down in here in case we drop back under $30. We shall see what happens at this level here for silver. And last but not least, let's get over to our puppy, WTI, crude oil. We're going to head over to the daily. We have seen prices plummeting here. Okay, so we are going to look at a couple of different levels. I am expecting WTI to gap on Sunday or gap in a few hours. Okay, so we're looking here again. If they go below 66.83, they could literally make a run. Look to your left. Okay, they could literally make a run for this next wick right here at 64. So this is going to be a telltale area. Take a look here. We've been here a lot of times before. We reacted, 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 and we've been reacting. This is going to be such a key level, this 66.83-ish area right here. Okay, if we get a candle to close below 66.74, we're going to continue selling crude oil to the downside. Okay, so this level here, crude oil has been, as a matter of fact, last week I don't think we traded crude oil too. It's been very choppy, right? If you go to the 8 hour, it was very choppy. So we're not going to change the game. We're going to move this up now for the 8 hour, and we're going to leave that down. So again, until further notice, right? Until further notice, we're looking for the floor here, right? We're looking for price to react at the floor here. Okay, I can just tell by the naked eye, we are in a Fibonacci area right in here. Okay, so we need to see what happens with Sunday gap. I'm going to put an alert at the 88. We need to kind of see what happens in this particular area right in here. And if we respond to it from here, we need to see this right here. Here's your telltale. This bullish engulfing candle. We get that bullish engulfing candle here, we're off. We're off again to 72. Okay, until we don't get that bullish candle over here, you got to play it small here. Meaning we can scalp 20 points all day, but if we're looking for the big move, we got to see this price action over here for it to happen. Okay, and if we get the candle to close below, I'll get rid of the Fibonacci for a minute. If we get the candle to close below this level, we'll make it red. Okay, other than a gap today, then we're running down to 64, right? We could literally run down to 64 like it's happened on 2 other occasions right in here. Okay, so crude oil is on standby. We'll see what happens with the gap today. We will look for some, possible buying opportunities down in here, but I've got to see the price action. I've got to see the price action at least on a 4 hour. Okay, I've got to see this price action on a 4 hour. Okay, so we'll see how this reacts right here at this alert later on today, and we'll take a look at the any particular gaps that may have bottom. Okay, so plenty of bottoms there. This can go further down, but again, I think we'll find out this week if crude oil. This is either going to be the bottom. Okay, this is either going to be the bottom for the rest of the year, meaning this is it for December. Okay, or we are going to go one more drop down, and then the next floor, 64, should be it for 2024. We will find out, right? If you're guessing, you're gambling. We have to let price action dictate what we are doing. Hey, listen, this has been a nice, cool live stream, almost 50 minutes. I hope you got some value. Okay, I hope you not necessarily learned something, but maybe it gave you some sense of comfort of something that you're already trading or you like to trade. Okay, so I hope you have the great rest of your day and trading week. If you're not in the club, because you're in the club, we talk all day. If you're not in the club, I invite you to join in. Got a lot of members here. I hope you have a great rest of your week. Don't forget to be kind to someone this week. We just came from a Thanksgiving holiday. If you celebrated, time to be grateful and thankful for who we have in our life and what we have in our life, and not focus so much on what you want, but more focused on what you have. And then you can work hard towards what you want, but don't make that the overglowing priority. Okay? Club members, I'll see you at 6 o'clock for our next live analysis, exclusive in the club area. So that will not be on YouTube Live, but it'll be in our trading app and community. Have a great Sunday, and we'll see you soon.